What up,
So you guys
fellas?
okay, so the team's like, are you going to be on? Are you going to be a non? Are you going to not be a non? They're like, no, we actually really need to make sure we have our faces here because we think we are very conventionally attractive. So
Hold
uh,
on. Our third co-founder said that, not the two of us.
I feel like you were behind it.
I've been mewing.
Yeah, I could tell, man. That's good. That's you guys. Whatever
Maybe
that
it's too
face
much.
filter that genomics AI founder that was all in the news last week. You see that guy who went on
No.
TVPN and he just looked like he had like the face filter on of like the what do they call it?
I'm
Why
gonna
do I know that?
download that.
Jod. Fuck, I don't know. I'm very happy I'm not too far down that segment of the internet. I'm just nerding out on the crypto side. So, all right, gentlemen, what you have a great name, great website, great idea, making Bitcoin productive, but I have absolutely zero clue what the hell you guys are actually doing. So, can you just give us the high level? What's the gap you're stepping into here with a button, and yeah, the opportunity you're running at?
It's obvious that crypto is going to win. Crypto rails are going to win. Tokenized assets are here, and the founding agreement of the financial markets is being rewritten, and we think Bitcoin is going to be the core at that. And if you believe in hyper Bitcoinization, which I think there's a lot of interesting data points that point towards that, right? Like the ETFs being widely successful, Bitcoin decoupling from the rest of the crypto market, Bitcoin becoming a macro asset. You're seeing headlines today from institutions and large, powerful people that like you would never guess even 3 years ago would happen, right? And so we think there is a tremendous opportunity to create like the prime brokerage for Bitcoin, turn Bitcoin productive, focus on credit, and I can let Salman highlight a little bit more of what we're doing to achieve that.
Yeah, sure. So we're building Bitcoin's prime brokerage. We want to build it fully on chain, focusing really on credit, yield, and trading infrastructure, and powering it on top of Hyperliquid. And so, like a very maybe more succinct example of what a protocol can do is a user can come in, they can deposit Bitcoin into our yield product. Our protocol will initiate a loan against that Bitcoin, and then it'll deploy the capital directly onto Hyperliquid's markets. The first strategy that we're going to be deploying is called like a basis trade. And so for the first time, you can kind of have this fully on-chain product, like end to end. The funds never leave the custody of our smart contracts, and people can have like a very transparent product on chain.
So why build this on Hyperliquid, not Bitcoin?
Yeah, go ahead, point two.
Yeah. Just a couple of things on that. So I think Hyperliquid really interesting what it's allowed it to do. There's a lot of things you can do now in Hyperliquid that used to only function through OES or off-exchange settlement, right? Like things that are also interesting is like the basis trade, for instance, right? Like Athena's grown really bigly with this, and you've seen kind of like 1010 as a good stress mechanism for them. They ended up doing pretty well, but I think a lot of that is because they have like like non-ADL agreements or whatever. So there's still some opaqueness, and I think for Bitcoiners, there's this level of mistrust that they have or distrust. Like the meteoric rise of Bitcoin has on this huge, price action trajectory of it, it has had so many instances of exchanges becoming insolvent. Mt. Gox, FTX, Cryptopia, right? Like everything in between. And so we think focusing on allowing people to do things on chain fits more within like the Bitcoin ethos, and having that as like your guiding ethos and still being able to build an awesome product was actually not possible until Hyperliquid came around. You saw like that the James Wynn arc in July where he's putting on these massive multi-yard trades, and it's fine. Like you can see that Hyperliquid can handle as much volume and open interest. In fact, it's bigger than a lot of other venues sometimes, and so there's a great opportunity there for us. And then another thing, when you're to touch on your question of like why not build it on Bitcoin, well, it's interesting to see how far Bitcoin scripting and stuff has come. Like some of the most fun I had over the cycle was doing all of the BRC20 stuff. The experience was awful though, and I'd meme it as like a vintage experience, right? It's a vintage experience that you're getting on Bitcoin. But we've come to a point, and this is something we talk a lot about internally, is delineating between Bitcoin the blockchain and Bitcoin the asset, right? So we think Bitcoin the asset, pristine, macro asset, very liquid, people want access to it. And now you can bring that asset onto a chain that was tailor made for trading to house all of finance, right? That's the other thing
Right.
here, I think, people that may not be as familiar with everything going on in Hyperliquid. Hyperliquid is, yes, it's an EVM chain, et cetera, but it was built from the ground up with certain trade-offs to enable the type of latency that you would get at a centralized exchange, right? The ability, just the liquidity in general is very insane as well. So that's kind of the way that we view it. Is I think over time, as Bitcoin has some scaling issues, there's also like the budget problem, the security budget problem that's going to be an overhang. I think we'll start talking about more in like 5-10 years from now. We think the chain can grow to evolve and maybe have some applications or have some kind of bit VM type thing. But right now, we think Hyperliquid is where we need to be.
Yeah, because I think we've had folks going after a similar opportunity. I think Arch Network was the team that we had on recently, and they're really approaching this from like a layer 2, I guess, conceptually on Bitcoin. I think this distinction between a chain and the asset is interesting. Can you maybe comment on why you've made the decision to go after the asset opportunity rather than, trying to bring? I mean, do you see an opportunity from a layer 2 perspective on Bitcoin, or is that just like the wrong way to think about things?
I think like if you want to build like yield products, pretty much like all on-chain yield and revenue comes from trading. And so if you want to build like a really good yield product, you need to be adjacent to trading. And
Right.
so what we've kind of seen over the last like 4 years is a lot of both spot and perp trading has moved on-chain. So this is kind of like more of the why now you can actually build these things fully like on-chain, is because before you didn't really have these like revenues that you could build close to. And so like you can build like a layer 2 that's focused on bringing yield for Bitcoin, but like where will that yield come from? And if you're going to have to be kind of like moving that asset value out to another chain to generate that yield, then it's kind of like a question of like, okay, what does this like layer 2 for Bitcoin even mean? And so for us, we want to be as close to the yield as possible. And then Hyperliquid uniquely has the features that we need to build that. So it has very liquid spot markets, has very liquid perp markets, and then it has the ability to interact with those markets from like a smart contract environment. And those are kind of like all the magical pieces that we need for our product itself.
Can you tell us about the, I guess, specific customer you're building for and focused on serving in the earliest stages?
Yeah, so the way that we view it is there's an interesting thing going on with Bitcoin too, where it's gone away from, early days Bitcoiners were buying like RPGs and shit on darknet markets, right? And now it's super bundled up, it's institutional, and you've seen this new group kind of come in that maybe don't have like super hardcore cypherpunk ideals, but really believe in Bitcoin as inflation hedge or as some kind of way to long the idiocracy of governments and fiat currencies and all this stuff. And so one thing that we've seen come through this in terms of demographics that we can go to is like you have ultra high net worth individuals that run like family offices. You have institutions, right? Like you have BlackRock, VanEck, a bunch of large institutional funds that hold Bitcoin on their balance sheet. And then you also have just individuals, right? You have individuals that denominate in Bitcoin. That this is something that I really miss about the old days of like BitMEX and stuff. Everything was settled in Bitcoin. And so you had a lot more people that held Bitcoin. I would approximate that like 10%, maybe less of CT has ever even done a Bitcoin transaction, which is horrible.
It's crazy, man. It's so crazy.
Yeah.
Probably, honestly, probably way less.
Based on the timelines being pissed off about this last cycle, I think it's probably way less.
It's probably way less. And so while we have this bucket, I think of like strong, almost like B2P institutional people that we think you can build an awesome revenue and business model, I think what we predict is over time, as crypto becomes a more mature asset class, where you have to choose winners. Right now, everything's going to go up as much. People are going to decide to just hold Bitcoin more, right? In terms of like, oh, I'm not going to hold this like meme coin, or I'm not going to denominate in Sol. Like, Bitcoin is going to have continuous flows for a long time. So we think you can serve institutional people, and there's this retail segment that's only going to grow more and more. In fact, like, I think there's a lot of Bitcoiners that aren't on CT, and one of our goals is to reach them and get them onto Hyperliquid and earning yield on their idle Bitcoin.
I'm curious. So I guess like the flip side of the sort of growth and institutionalization of Bitcoin is that we're seeing so many of the financial products that maybe you want to go build being built in more of the TradFi space. So I'm curious how you sort of look at like the competitive dynamics here, because there is a path that I see where this is just the BlackRocks and the Wall Street firms that are actually able to offer these structured products in a more trusted way, and maybe the on-chain one serves a different market. I'm curious how you sort of see the market evolving.
Yeah, that's a good question, and I want to hear Salman's take on it too. I think it's actually the way that I would view it is, for instance, like look at all of the like DeFi lending pools, right? Obviously, like Aave, all these things have tremendous product market fit. You don't see any of these institutions building those out, right? Because they don't
But are
want
they
to take the risk.
participating in them either, though? I mean,
They're
I guess it's the
participating to
connection
some
between
degree.
institutional buyers and institutional products that I think is interesting to me.
Yeah, they're participating in this stuff to a decent amount of degree. A lot of it is like regulatory compliance and stuff's going well. But if you look at things like Centrifuge and all of these on-chain products that are coming on, like tokenized equities, tokenized private debt, people are participating there. And I think for these institutions, I saw that they're doing like covered yield products, things like that. I just think that those products, because of the fees and the nature of the way that they function, are just not superior products. And it's also a 24/7 market. So while you can build these institutional products, they're not for a 24/7 world, which means it's like rebalance. That's why you get these CME gaps all the time, right? And so I think building it on chain for an asset like Bitcoin that trades in like is a macro asset now makes a lot more sense. And we've heard from like institutions that they're like interested in deploying these types of Bitcoin vault yield products in lieu of kind of what some of the stuff that they're doing. There's all these DATs, for instance, that have Bitcoin that they're not doing anything with. I think you're going to start seeing more and more of them, deploying into. Once one of them does it, the Rubicon's been passed, and more.
What do you see as the competitive edge here or moat? Like, where's like that opportunity to really dominate a market?
Yeah,
We
I
have
think,
Salman, bro.
yeah, maybe to like add to what Soby was saying, I think there's like an access standpoint. There's going to be like structured products that exist in TradFi that maybe aren't accessible to large Bitcoin whales. I think that's like an area that we can innovate on. And then I think there's also like ways we can be competitive with even the TradFi structured products. So like trying to like understand what is it that they prefer about these TradFi products. So for example, it might be like, hey, I want to I need to deploy my Bitcoin, but I can only deploy my Bitcoin through like a qualified custodian, right? And those are things that we can also build towards. Maple has done a really good job kind of pioneering that, and I think that can kind of extend also to structured products as well.
Yeah, how do you guys see the, I guess, big opportunity as you look forward? Like, do you think, is this kind of a winner takes all market? You need to go be like the on-chain institutional product for Bitcoin, or is the market just so massive that like everybody's just going to be able to eat if you have kind of a good wedge into it?
I think it's like pretty massive. I also think that, for an institutional allocator, they're always going to kind of come up with like an overall strategy, and that's going to include like multiple different kinds of products they want to deploy into. And that might be for diversifying risk or diversifying returns or following kind of whatever strategy that they're trying to follow in their firm. And so I think, ultimately there's going to be like a wide variety of different products that speak to kind of like different people. The same way that we see for like pretty much every single other asset class, I think we'll see it for Bitcoin and structured products as well.
Yeah, interesting. So, okay, I'm curious where you're at in the development. I see I can join the wait list right now. Is this something that's in market in some ways, coming soon? Where are you at?
Yeah, coming soon. Officially, as of Sunday, we finally put on our first trade in production, like end to end, from like smart contract all the way down to hypercore. And so if you're a Bitcoin holder and anything we talked about resonates with you, do reach out. We'd love to kind of like onboard you, give you the white glove treatment, get you into our products, start getting feedback. And once we feel confident that we're building to what the market needs, and we're bug free, then we'll start to roll it out to more customers.
Nice, couple DMs coming your way.
Hopefully, yeah.
DeFi Legos with Bitcoin. It's interesting to me I think that distinction between the chain or the network and the asset is a really important one. And I think if you kind of look at them independently, it maybe gives you a slightly more expansive view on what's possible. And I think the idea, I mean, as far as like where opportunity lies, it seems clear that Bitcoin as an asset is the bigger opportunity here. So
One thing I want to touch on too, because you said DeFi Legos, that's another reason I think on-chain products are better, is the reason to build something on-chain is composability, right? So whether that's as simple as having some type of Bitcoin bond or a Bitcoin yield product or whatever that ends up having a Pendle looping strategy on top of it, or it has integrations into other money markets, et cetera, and you can tokenize that position. Not to say that's what we would do or whatever, but I'm just saying, like, to throw that thought experiment out there. It's very interesting to think about, like, well, why would you build something on chain, right? So you build something on chain, so it's non-custodial, it's transparent, people can audit it, et cetera. It's globally accessible, but then I think the main thing is really having this ability to have composability across the stack is really interesting. And in fact, it actually, like, if you have a traditional product too, it can create like arbitrage things where someone could go like, hey, like I can get maybe the basis on CME versus on Hyperliquid is different, things like that, which introduces more flows and more volumes and more revenue, et cetera. So some cool stuff there too to explore.
I'm interested in what it's been like building on Hyper EVM, and maybe your bull case for Hyperliquid more broadly amidst the few weeks of kind of FUD that we've seen.
I think we've seen like a lot of like sentiment that Hyper EVM might be like a failure. We've also kind of seen kind of other entrants come into the market like Lighter, which I think will do like pretty well in its own regard. I think building on Hyper EVM can be challenging, but it doesn't mean that it's not possible. I kind of compare it to maybe the class chewing phase that a lot of Solana developers had on Solana as well. And the teams that are going to be committed to building through like bull and bear markets, I think will come out like pretty strong. And then Hyperliquid broadly, pretty bullish. I think the most interesting thing that's happening right now is these HIP3 markets with equity perps. And what I'm really looking at is going into major events like earnings or kind of like Fed decisions. What is like the activity that people are taking? And if they are expressing some sort of like speculative view going into those events, I think that's like really, really bullish. I think we saw that with NVIDIA. Pretty excited to see what happens with these other tickers as well.
Awesome, guys. Well, I'm intrigued. I'm just like a Bitcoin guy who just doesn't, like, it would be very hard for me even to touch my Bitcoin right now. And that's been by design. So I'm really intrigued by this new era of holders, owners, because I think it is clear that there's different expectations and beliefs and uses and sort of, I guess, narratives that people are stepping into here. So I think I both see the opportunity here and also feel like I might be one of those people that's still running the command prompt here because that's what I got used to and sort of like the mental model I have around it. So,
I mean, I think there's a lot of people that are here realizing they were underexposed to Bitcoin, waiting for price to come down a bit. And when you're buying again, maybe it's an opportunity to buy it in a new place and put it to productive work instead of the place you bought it 3 years ago.
That's true. Yeah.
Yeah, that's the thing though, is like no one owns enough Bitcoin.
I agree.
Right? So there's that fundamental issue. And then I think this is actually an interesting thing that I'm realizing right now after speaking to you guys is we're like the unks, but we're all the like boomers on this Bitcoin shit. Where like we just could have just held Bitcoin instead of ever buying fucking Ryblock or something,
It's fucking NFTs.
And fucking NFTs, dude, don't even start with that.
But think of all the friends we made along the way.
But the thing about friends, the cohort of people that own Bitcoin is only going to continually grow. And I actually think there's going to be a large market segment of people that own Bitcoin through passive flows. So this could be, there's like their brokerage account, their retirement account or whatever, right? They own Bitcoin through like an ETF or whatever. And they don't even know they own Bitcoin. But those institutions that custody it, they were like, oh, well, how do we earn more yield on this Bitcoin, or what do we do with this? And I think you have that area, and then you also have individuals that are, it's become more and more apparent now that like the government is redacted and like things are not going well. And more people, I think, are starting to understand like how money works, fiat currency as a conduit for like basically wealth erosion, et cetera. And now as this becomes more of a mainstream talking point, I think more and more individuals are going to go, I need to own some Bitcoin. I need to own some Bitcoin, right? And gold is going up like a shit ton. One of the best trades I did, like I'm brown, my mom loves gold. That's like her whole thing. And I bought her like a bunch of gold. She's like crushing it in that trade.
Yeah.
Right. And gold, as gold goes up more, that's like, to me, the trade has always been Bitcoin's going to flip gold one day. And so I'm hearing like my friends that literally were like aping iron calls and Nebius calls and all these like random hyperscalers are like, oh, I need to buy gold now. And the thing is, like, gold is awesome, but you can't use it on the internet, right? And as the world becomes even more interconnected, and you have AI agents and all this stuff, like, I'm sorry, brother, like, no one's gonna send you GDX stock or whatever. Like, it just makes sense that more and more individuals are going to own Bitcoin, especially because Bitcoin is easier to own. Like, owning $100,000 of Bitcoin versus owning $100,000 of gold. Like, the gold, you have to store it, you have to make sure it's not fake, right? You have to transport it, etc. You can easily hold $100,000 worth of Bitcoin, elect to do something or not. But I think you're going to see more individuals that, maybe aren't on CT or haven't been on Twitter for a while, but they see the way that the world is going around them, and they go, oh, okay, like, I need to own Bitcoin. The trade makes more sense to me now.
Oh yeah, keep pitching me on Bitcoin. I love it. I need it. Give me to buy more. I mean, to me, like, the most interesting narrative for Bitcoin, in my mind, at least the thing that's landed the most with my friends, is comparing it to real estate back in the 60s, 70s, and 80s. It's somewhat of a fixed asset, but it's a hard asset. And I think while a lot of people feel like they're left out of the real estate world right now, anybody can go in and start getting some exposure to an asset. I think will have a similar dynamic, at least in sort of like North America over the last little while. So go buy your Bitcoin. I mean, I know there's so many people, even I'm looking at the chat here saying, oh man, I'm not into Bitcoin too much besides the mining aspect. And Jafar's kind of international banking strategy is a great name for that comment. But I think it is interesting just how many, all these sort of polls that you see on crypto Twitter, how much your portfolio is in Bitcoin. It's like less than 10% was the majority that I saw in this last poll. And it's like, what are we doing here if you're not getting exposure to the OG? Like, yeah, I don't know.
It's pretty simple, buy some Bitcoin and then press the button.
Yeah. Oh, I see what you did there. All right, gentlemen, well, let's leave it there. Appreciate you hopping on. Let's sync up again when you are about to go live, or have something that we can actually go mess around with.
Cool, man.
Yeah, we'll hit you guys up and play with the product bit too.
Yeah. I got some Bitcoin.
Appreciate you guys.
For sure.
I need one of those Seed Club hats though, bro. We're not letting you in.
Bro, you should see what we got.
We got some stuff cooking.
You got some crazy merch.
We got some stuff.
Send it to the office. We don't even have water or coffee here, but we'll have Seed Club merch.
Well, it's actually, you're not allowed to if you're not hydrated and caffeinated, you're not allowed to wear the hat. So if you can go fix that first, that'd be good. Gentlemen, thanks so much. We'll chat soon.
Take care.
Peace.
That's right.